Jeremy Brazil was appointed President of Markel International Insurance Company in 2008 and has been an underwriter in the London market since 1989. As President, he is responsible for the strategic management of Markel International's underwriting divisions and also has responsibility for its reinsurance buying strategy. At the end of 2012, the specialist insurer announced that it was to buy Bermuda-based Altera. With this acquisition, Markel now has greater access to the expanding Latin American markets, and the deal has opened up new lines of business for the growing company. With so much experience of the industry, I asked Brazil, what is the biggest challenge facing their global markets?
I think there's a number of issues. One is the poor investment climate. Secondly, there's the issue of trying to grow. Europe and the US tend to be mature, overserved markets where growth is either by acquisition or organic. Obviously, there's attraction in some of the faster growing economies, such as Latin America and Asia, but those were not without their own risks in terms of style and culture of those markets, economical, political stability, etc. Also, there's a changing landscape in terms of technology. I think, data is key. Also is trying to sell and distribute your products perhaps more on a retail side, where we listen more to what the customer, how the customer wants to be approached, how do we engage with the customer, and how do we sell those types of products. London has always been sort of criticised for being slightly behind the curve when it comes to technology, but there has been some quite interesting changes in the last few years, one of which, for instance, is electronic claims files, which is something that we've been a great proponent of. And whilst that was a bit bumpy because it was a change in process, nevertheless we are now seeing the benefits in terms of material information being spread around the market a lot quicker, decisions being made quicker, and ultimately clients receiving their claims payments quicker. Interesting conversation recently about technology. One of the areas that seems to be growing is, for instance, mobiles and apps, and a lot of the information coming forward now is that a lot of customers are looking for mobile app-friendly websites, and to the point where I think something like 60% of people that would use that technology wouldn't if it wasn't a mobile-friendly website. So there's that aspect coming. Also, in terms of trying to deal better in terms of having higher quality data. In an ideal situation, we would want our customers, be they brokers or clients, to be able to produce information in a format that we can digest and put into our core systems without sort of manual intervention. That has the benefit of improving the data quality and the speed of that transfer. That's always a difficult question because typically if you have a year where you have very few reinsurance recoveries, you'll always be questioned as to whether that was a prudent buy. When there is a loss, you wouldn't want the embarrassment of your reinsurance program not picking up that loss. So it's a hard question to answer. I think that more in terms of the reinsurance purchasing strategy, you have to be clear on what your core part of the program is, which you feel strongly through the test through the test of time will show that it has a benefit to both parties. It's always easy to look at a program that failed to pick up a loss from the prior year and change the program so that you don't have that embarrassment going forward. The only thing you do know, you will not have that loss again. So really it's back to my point, you have to decide what your key risks and exposures are, make sure that year in, year out you adequately reinsure them, and anything in addition to that is kind of more opportunistic or adding sort of some value to the bottom line.